Back with Midcap Masala, and you're catching us live from the Suzlon studio here at ET Now. Before the break, we were interacting with the management of Ixigo. Remember that stock has taken a nosedive of about 9% on the back of weaker than expected numbers coming in and some pressure coming in on the EBITDA and the margins. The management continues to remain confident. They say that this is the investment phase of the company and this should translate into a stronger top line very soon. But shifting focus then, let's interact with the management of Suprajit Engineering on the back of their Q1 earnings. The revenue is up 24% on a year-on-year basis. EBITDA has seen very good growth of 57% year-on-year. Net profit is up 8% and we've seen some margin expansion of about 250 basis points as well. So all in all, seems like a good set of operational numbers coming in from Suprajit Engineering. So let's try and decode what the quarter looked like and more importantly, what's the outlook going ahead. We've got the Executive Chairman of Suprajit Engineering, Mr. Ajit Kumar Rai, joining us on the show. Mr. Rai, hi, morning. Good to be speaking with you. While I realize that profitability has grown sharply on a year-on-year basis, sequentially we've seen some pressure coming in on your bottom line. How much of this is the ICM PLE cost pass-through and when does the normalization happen?
Good morning and thank you for having me on your channel. Yes, we had an exceptionally good quarter. The operational numbers have significantly improved, particularly our global business. Our GCM, Global Cables and Mechatronics, has performed exceptionally well. Post the restructuring that we had announced and completed last year, we spent significant amount of money and cost last year. That restructuring has now clearly indicates that the direction that we have taken in our global business has yielded very good results in terms of financial performance. Now, coming to the India business, thanks to the Gulf War, I think we have had significant pressure on input costs. There is always a timing effect. The input cost impact is immediate, whereas pass on takes 1 to 2 quarters. And we have pricing understanding with customers at various points in time, not necessarily when the price goes up and down. So all those things will get normalized in this quarter. And by Q2 as well as by Q3, we should be back to our normal margins that we have historically had in both in ICM and in PLE.
Okay, Mr. Rai, good morning. Ashesha here. And this quarter numbers were good, but what about the full year? Because at the end of the last quarter, you had guided for double-digit revenue growth, coupled with margins in the range of 12 to 13.5%. And you did tell us that margins are expected to normalize in the third and fourth quarter of this year. Does that mean that the full year guidance remains intact, or would you like to revise your guidance upwards from the current levels?
Our guidance for the year remains the same, despite this one quarter, I would say a timing issue on 2 of our divisions. We continue to believe, in fact, our margin, despite these 2 divisions having slight underperformance, is at 12.1%. So we are in the bottom end of the 12 to 13.5% margin guidance. We are very confident that we will meet that guidance. Even on the top line, I think, we talked about double-digit growth and we already at about 22%. So we don't see any problem with our guidance for the year, yes.
And I'm just trying to understand your SCS and GCM business. They've very recently turned EBITDA positive and you're looking at 10 to 12% margin target over here as well. Can you help us understand if this EBITDA positivity is going to continue? Is that something that's here to stay and how are you looking at achieving this 10 to 12% margin for these particular businesses?
Yes, I think Global Cables and Mechatronics business has done well. The consolidation that we have done has yielded significant cost efficiencies within the operating units. So the margin of 10 to 12%, what you have said, is certainly achievable. In fact, again, in the first quarter, it has outperformed the number. Actually, the EBITDA margin for the GCM was at 12.5%. So we exceeded our own budget or our own projections. So we don't see any problem in meeting that guidance as well. So it should be a good year for GCM in particular.
You did talk about West Asia and the fact that weighed heavy on margins in the quarter gone by. How much was the impact, if you can quantify that for us? And do you believe the worst is behind us in terms of the impact it had on margins in the quarter?
I think on the India cables and mechatronics business, we had about a 200 basis point hit due to the timing effect again. we expect it to recover fully in the next quarter, I mean, this quarter and next quarter. Whereas in the Phoenix lighting and electricals segment, the margin it has been a little more significant because what we did was because of some market pressures in terms of the competition, we delayed the price increases in the aftermarket, which is our main business. So that has been now corrected. So I think this quarter we will see the whole change happening. So I think again it's a 1 quarter issue. So I would say overall this is just a blip in our journey, and we don't see it as a change of course at all.
That note, what kind of growth can we expect to see in the second quarter? How much will it moderate from the first quarter?
It depends upon the Indian automotive industry, first of all. I think we have had a very good July. So now the festival season is on. So we actually see Q2 to be very strong. Even our global businesses, I think generally August is kind of a slow month because of the holidays in Europe and some of these countries. But having said that, I think we still believe that the growth momentum that we saw in the first quarter is expected to continue in the second quarter also.
So the growth momentum of first quarter will likely continue in the second quarter. Mr. Rai, you have also spoken about China being a big opportunity for you, and you spoke about Europe also. Take us through what your export opportunity looks like and what kind of ramp up we will see in the coming quarters, because about 60% of your revenue clearly comes in from the export market.
China, as we have announced, I think we have had a very good connect with one of the largest EV player in the world. The new contracts, nearly 25 new contracts we have won with them. It's all getting scaled up. I think we already launched, commercialized at least 5-6 of them. Over the next 12 months or so, commercialization of the balance projects will take place. So we expect a solid, something like a 20% growth in the China market. In terms of how the businesses are there globally, I must say that the global auto business is not growing. So is non-automotive. However, as you have seen in the first quarter, we have had something like a 28% growth, something like a 15-20% growth, which is a clear outperformance of the global industry, is continued to be there as we see it at this moment. This is all because that we have been receiving significant new contracts. Actually, we have done a business update, recently to the stock exchanges where we have won certain contracts which are very significant in value. All of them will get into production in the next 12 to 18 months' time. So we see that the roadmap we have for the next 12, 24 months is pretty solid.
Sounds really optimistic. And lastly, Mr. Rai, your Blue Brick ABS and sunroof cables, they are under testing as of now, as I understand. What's the launch timeline for the commercial launch, and what could be the flow through to your top line from these segments?
I think these are all new initiatives. I think ABS is a new initiative within our braking division, whereas the sunroof cables is the one area we didn't have a product, so we are doing it. It is just an additional product. It is not so much as when it will get launched. It is just to make our portfolio perfect. On the braking side, I think we have significant new inroads that has been made. We are winning new contracts, both for our hydraulic braking systems, for our CBS, for our brake drums and brake shoes. There has been a good traction in the braking division. So I think that is another thing that will take our business to a good position, so that maybe by next year we will start declaring our braking division as a separate division within the group.
Okay, so that's as far as the outlook for the next few quarters is concerned. Mr. Rai, thank you so much for taking your time out and joining us here on ET Now.
Thank you.
And with that, it's a wrap on this edition of the show. Thanks so much for tuning in. Buy now, sell now will come up next.